Are you tired of getting subpar returns on your investments? Do you want to take your trading game to the next level? Well, look no further. In this video, we're going to show you how you can use cutting-edge AI trading indicators and algorithms to skyrocket your portfolio and leave your competition in the dust. Hey there, fellow traders. It's great to have you here. If you're like most investors, you're always looking for ways to get an edge in the market. And with the rise of artificial intelligence, there's never been a better time to take advantage of these innovative tools. In this video, we're going to explore some of the most powerful AI trading indicators and algorithms that can help you maximize your returns and minimize your risk. We'll show you how these tools work and how you can use them to make informed trading decisions that can lead to massive profits. So, if you're ready to take your portfolio to the next level, keep watching. Before we dive in, don't forget to hit that subscribe button and turn on notifications so you don't miss any of our future videos. And if you have any questions or comments about the content, be sure to leave them in the comments section below. We'd love to hear from you. Okay, let's get started. In today's fast-paced and dynamic financial markets, investors are constantly seeking innovative ways to optimize their trading strategies. With the advent of artificial intelligence, traders now have a new tool that can help them make more informed investment decisions. AI-based trading strategies leverage machine learning algorithms to analyze vast amounts of market data and identify trends, patterns, and correlations that are not visible to the naked eye. This allows traders to make data-driven decisions, reduce human bias, and execute trades with greater precision and speed. One of the most popular AI-based trading strategies is algorithmic trading, which involves using computer programs to execute trades automatically based on predefined rules and criteria. Algorithmic trading has been proven to deliver superior returns compared to traditional human-based trading methods and is now widely used by hedge funds, banks, and institutional investors. However, AI-based trading strategies are not without their challenges. These include the need for high-quality data, the risk of overfitting or bias in algorithms, and the potential for unforeseen events that can impact market behavior. To address these challenges, researchers at the University of Michigan developed a powerful tool known as the LORENZIAN classification AI algorithm, which has been gaining traction in the financial trading world. The first indicator we will discuss is the LORENZIAN classification AI algorithm. The LORENZIAN classification AI algorithm is a machine learning approach that uses market data to classify and make predictions about future price movements. The algorithm analyzes market data to identify patterns and trends that may not be apparent to human traders. It then classifies the data into different categories, such as bullish or bearish, and makes predictions about future price movements. One of the key advantages of the LORENZIAN classification algorithm is its ability to handle noisy or incomplete data. The algorithm is able to analyze complex financial market data and make accurate predictions. It can also adapt to changing market conditions, updating its predictions and adjusting its trading strategy accordingly. Traders can leverage the power of the LORENZIAN classification algorithm by using a trading indicator called machine learning, created by J.D. Horty. This non-repainting indicator generates signals based on market data, using the LORENZIAN classification algorithm to help traders make more informed investment decisions. To use the machine learning indicator, traders can add it to their charts by clicking on the indicator's option and typing machine learning. The signals generated by the indicator remain on the chart once the candle bar is closed. By using the signals generated by the machine learning indicator, traders can make faster, more accurate trades and take advantage of small price movements. The volume profile indicator. The volume profile indicator is a technical analyst tool used in trading to help traders identify levels of support and resistance and potential price movements based on the analysis of trading volume. This indicator displays the volume of trades that occur at different price levels over a specific period of time. Plotting this information as a horizontal histogram that shows the volume of trades that occur at each price level. Traders can use this information to identify areas of price congestion where a large volume of trading activity has occurred, indicating potential levels of support or resistance. They may also use the indicator to identify potential breakouts, as a sudden increase in trading volume at a certain price level may indicate a shift in market sentiment and the potential for a trend reversal. Combining the LORENZIAN classification and volume profile indicators. To make more informed trading decisions, traders can use both the LORENZIAN classification and volume profile indicators together with an AI-based trading indicator, such as the machine learning indicator. Combining these tools can provide traders with a more comprehensive understanding of a market activity and help them identify potential trading opportunities. When using the volume profile indicator with an AI-based trading indicator, traders should first identify areas of price congestion using the volume profile indicator. They should then look for signals generated by the AI-based trading indicator, such as the machine learning indicator, to confirm their trading decision. For long trades, traders should only make trades when the price is closed above the blue background zone. They should also look for increased buying volume and ensure that the machine learning indicator prints a buy signal. If these conditions are met, traders can place a buy order at the close of the price bar, with the stop loss placed below the recent swing low. The target should be 2 times the risk. For short trades, traders should only take trades when the price is closed below the blue background zone. They should also look for increased selling volume and ensure that the machine learning indicator prints a sell signal. If these conditions are met, traders can place a sell order. Then we can also use ChatGPT for trading predictions. You can use ChatGPT to help better your trading knowledge on the stock market via asking it questions. Here are some ways in which ChatGPT can be used to help you in your trading journey. Get answers to your questions. Whether you're a novice or an experienced trader, you're bound to have questions about the stock market and trading. ChatGPT can provide you with detailed responses to specific questions such as, what is a stock, or what is technical analysis? By having a better understanding of the basics, you'll be able to develop a solid foundation for your trading journey. Gain insights from market analysis. Market analysis is key to making informed trading decisions. However, it can be difficult to keep up with the latest trends and sentiments. That's where ChatGPT comes in. You can ask ChatGPT questions like, what are the current market trends, or what is the outlook for a specific stock, and get a comprehensive response that can help you identify potential opportunities and risk. Develop trading strategies. One of the keys to successful trading is having a well-defined strategy. However, developing a strategy can be challenging, especially if you're just starting out. ChatGPT can assist you in developing trading strategies that are tailored to your risk tolerance, investment goals, and market conditions. You can ask ChatGPT questions like, what are the best trading strategies for beginners, or how can I use technical analysis to develop a trading strategy, and get a customized response based on your preferences and needs. Learn from historical data. History has a lot to teach us, and the stock market is no exception. By learning from past events and trends, you can make better trading decisions in the future. ChatGPT can help you learn from historical data by providing you with insights on past market trends and events. You can ask ChatGPT questions like, what happened during the 2008 financial crisis? Or, how did a specific stock perform during the last recession? And get a detailed response that can help you identify patterns and potential risk. Stay up to date with news and events. Staying up to date with the latest news and events is essential to being a successful trader. However, it can be time-consuming to sift through all the information out there. ChatGPT can keep you informed on the latest news and events that can impact the stock market. You can ask ChatGPT questions like, what is the impact of the latest Fed policy? And get a timely response that can help you stay ahead of the curve. ChatGPT can be an invaluable tool for anyone interested in trading stocks. By using ChatGPT to ask questions, gain insights, and develop strategies, learn from historical data, and stay up to date with news and events, you'll be well on your way to becoming a successful trader. As we wrap up this video, I want to emphasize the importance of utilizing AI trading indicators and algorithms to enhance your portfolio. These tools are designed to provide you with valuable insight and help you make informed decisions when it comes to investing. With the increased complexity of the stock market, it can be challenging to keep up with all the changes and fluctuations. That's where AI comes in. By leveraging advanced algorithms and machine learning techniques, these trading indicators can analyze large amounts of data and provide you with the most accurate predictions about the market. And before you go, make sure to check out the other video on the screen. It's packed with even more valuable insights and tips. Make sure to like and comment on which indicators you guys like.